All right, let's talk about investing. If you've ever felt like it's some kind of exclusive club and you don't have the secret password, then you are in exactly the right place. Today, we're going to tear down the walls, demystify the jargon, and get you from feeling lost to feeling totally in control of your financial future.
Does this sound familiar? I bet it does. It's so easy to feel like you're the only one who doesn't get it. But here's the truth. The world of investing is designed to feel complicated. But you don't need to be a Wall Street wizard to succeed. You just need to understand a few simple core ideas.
So why even bother with all this? The number one reason is something called inflation. You see it every day, right? The price of gas, groceries, you name it. It just keeps ticking up. Well, if your money's just parked in a savings account, it's actually losing its value. It's losing its purchasing power day after day. Think of inflation as a silent thief, and investing is basically your getaway car.
Okay, but the second we say investing, what's the first word that pops into your head? For most people, it's risk. That fear of losing your hard-earned money is totally real, and it's the biggest thing that holds people back. But here's the secret. Smart investing isn't about avoiding risk altogether. No, it's about understanding it and learning how to manage it.
And check this out. This data from the FINRA Foundation really nails the problem. A huge 80% of people get it. They understand that investing has risks, but then look at the drop-off for that second bar. Only about half of those people can actually identify ways to deal with that risk. And that gap, right there, that's where all the fear and anxiety lives. And that's the gap we're going to close right now.
So how do we do it? How do we build that bridge? Well, it all comes down to three core principles. And trust me, they are way more intuitive and way less complicated than you'd think. This is the simple framework for investing with confidence.
Before we get into any fancy terms, let's just use a really simple analogy. Imagine you're a street vendor. On sunny days, you sell sunglasses, and you make money. But on rainy days, you're out of luck, unless you also sell umbrellas. By selling both, you're set up to make money no matter what the weather does. That simple idea? That's the heart of managing risk. So here they are, the three golden rules. First, you've got asset allocation. All that means is deciding your big picture mix, like maybe 70% growth stuff, 30% safer stuff. Second is diversification. That's the sunglasses and umbrella strategy, not putting all your eggs in one basket. And finally, rebalancing. That's just a simple yearly checkup to make sure your mix is still on track. That's it. Okay, so we've covered the why and we've covered the how. Now let's get into the what. What are the actual tools, the building blocks you'll be using? It really boils down to three main categories. You've got stocks, which are like your growth engine. They have the highest potential, but also the most bumps in the road. Then you have bonds, which are more stable, kind of like the steady anchor of your portfolio. And finally, cash, which is the safest, but, it's not going to grow much. A healthy portfolio usually has a smart blend of all three. Now, you might be wondering, how do I actually buy these things? Well, you could buy a single stock, like one piece of one company. Or you could buy something called an ETF, an exchange-traded fund. And honestly, for beginners, this is a total game changer. An ETF is like buying a whole pre-packed basket of investments at once. So instead of trying to pick one winning stock, you can buy an S&P 500 ETF and instantly own a tiny piece of the 500 biggest companies in America. It's instant diversification. It's that simple. So, we've talked about the rules and the tools. But now we need to talk about your single biggest advantage as an investor. It's not about being the smartest person in the room or having a ton of money to start. It's something you already have. It's time. And the magic that fuels the power of time is something called compound interest. You've probably heard of it, but it's really incredible when you see it work. It's when your earnings start making their own earnings. It's a chain reaction. It truly is like a small snowball at the top of a very long hill. And as it rolls, it just gets bigger and bigger and faster.
So just how big can that snowball get? Well, check this out. If you invested just $200 a month, that's it, starting at age 22, and you earned a pretty average 7% return, by the time you're ready to retire, you could have over $500,000. That's not a typo. That is the mind-blowing power of compounding. But what happens if you wait? What if you put it off for just 10 years? The difference is staggering. You invest less money overall, sure, but your final nest egg is less than half the size. This is proof. When you start investing is so much more important than how much you start with. Time is your most valuable asset.
Which brings me to probably the most famous and most true saying in all of investing. So many of us get paralyzed trying to find the perfect time to jump in. We're scared of a crash. But the reality is,
Nobody, not even the experts, can consistently time the market. The real secret is just to be in the market consistently through the highs and the lows. That's how wealth is built.
Okay, we have covered a ton of ground. So let's bring it all home and boil it down to the essentials. Let's talk about your simple path forward from here.
So here's what you need to remember. 1. Let that compounding snowball do the heavy lifting for you. Just be patient. 2. Diversification is your shield. It protects you from the inevitable ups and downs. 3. You're in a race against that silent thief, inflation. And finally, 4. Consistency beats cleverness. Every single time. You don't need to outsmart anyone. You just need to stay in the game.
At the end of the day, all of this, it's not really about charts and numbers. It's about building a better, more secure future for yourself. It's about giving the person you'll be in 10, 20, or 30 years from now more freedom and more choices.
So the goal isn't to become a stock market genius overnight. The goal is just to start. To take one tiny step. So forget about the perfect plan for now. Just ask yourself, what's the first small step you'll take today to get that snowball rolling? Thanks for watching.